All right, everybody, welcome back to Alternative Finance. My name is Alex, and this is our Investing 101 series. We are moving right along, and today we are talking about funds. So mutual funds, exchange-traded funds, ETFs, funds of all kinds. What are they? That's what we're here to talk about today. So if you're liking this kind of content, please smash that like button, subscribe to the channel, and without further ado, here we go. So first and foremost, what is a fund? A fund is a pool of money collected from multiple investors that's managed by a professional or financial institution. The goal of the fund is to invest in various assets. Now, this could be things like bonds, stocks, other securities, and all kinds of things that could be invested in. And the goal is to generate returns for investors. So let's break that down really quick. So you are taking your money and putting it into a pool of money with other investors, meaning that it's going to be taken and managed by a professional money manager who's going to manage your money and everybody else's money in the same way. Now, what are they invested in? That will depend on the goal of the fund itself. So all the different types of funds will have different goals. Some will be going for big time growth. Some will be looking for more conservative type of things, and really anything there in between. But that will be detailed to you in the information on that particular fund. Now, funds are structured to provide diversification, which means that it makes it easier for individual investors to access a broader range of investments than they would probably be able to access on their own. So think about it this way. Instead of putting your money into a particular stock or company or a particular bond or something like that, you are taking your money and allowing it to be put into a bucket that's filled with all these different types of companies for you, providing that diversification, building out that diversified portfolio for you, and you just invest in the bucket. That is how that works. So now let's talk about what types of funds there are. I mentioned a couple at the intro. Let's talk about that in detail, starting with our mutual funds. What is a mutual fund? Well, a mutual fund is a fund that is managed by a professional fund manager or team whose job is to make investment decisions aimed at achieving the fund's specific objectives, whether that's growth, income, preservation of capital. So kind of like we just discussed, there's literally a fund manager or a team of fund managers who are at the helm making those investment decisions. To put it more basically, mutual fund equals actively managed. So there is a group of people, more than likely, making decisions day in and day out to make sure that they do their best to achieve the goal that they have specified. Now, some people prefer this, right? Some people prefer to have somebody watching over their money and knowing that there is somebody actively looking at it and making those changes. This, on the downside, can potentially lead to higher internal costs. And that makes sense, right? If you have a team of people managing your money actively, that's going to require some money to pay those people and go into the operations that fuel that active management. Likewise, you're going to want to be wary of the mutual funds that you select. Not all mutual funds are created equally, and if you choose one that has a bad management team, that definitely could jeopardize your savings goals. So there are plenty of ways to research mutual funds. Make sure you're looking into that before you make those investment decisions and you're choosing the best mutual funds you possibly can. Now, one final thing I want to note on mutual funds is that they do not trade actively throughout the trading day. Now, that will be different from some of the things we're going to talk about here in a moment, but mutual funds, what you need to know is that when you place trades with mutual funds, they typically do not go through until the end of that trading day. So even if in the middle of the day you want to place a transaction, you can place that trade, but it will not go through and be actually transacted until the close of market that day. So you won't get the live price. It won't be like an active trading type of scenario. It'll be at the end of the day, whatever the close is, that's what you would get, and they would get you out of that position at that time. And that is a nice segue into my second type of fund, which is an ETF, an exchange traded fund. So what is an ETF? An ETF, for all intents and purposes, is going to be very similar to the mutual fund we just described. Similar to a mutual fund, it is a bucket of investments. You invest in the pool and the whole bucket. It's going to have a whole bunch of stuff inside of it, and it's going to provide that diversification just like a mutual fund. But Number one, ETFs are not always actively managed. While actively managed ETFs are becoming a thing and becoming more popular, that is definitely not always the case. A lot of times they will show you that goal, invest accordingly, and then just track that goal without being actively managed, without actively making changes. Secondly, ETFs do trade similarly to stocks on the open market. So with the mutual funds, I just said that it takes to the end of the day to be able to close out of those transactions. With ETFs, it is very similar to a stock. If the stock market is open, I can place a transaction and get whatever the fair market value shows at that given moment. So those would be two distinctions between an ETF and a mutual fund, but they are very similar in the way they operate. In review, ETFs are generally not managed. Some exceptions, especially recently. Reviewing the goals and portfolio of the fund is even more critical with ETFs because the investments are not going to be actively overseen. As a result, the costs are usually lower. And if we think about it, that makes sense. No team of people making decisions, lower costs. That's the differences. Let's move on. Finally, the last type of fund we are going to talk about is an index fund. Now, this is really a type of ETF, but a lot of people like to invest in index funds and use index funds, so we're going to talk about them here today. So what is an index fund? An index fund is a type of investment fund, an ETF, like I just said, that aims to mirror the performance of a specific financial market index. For example, the S&P 500, the Dow Jones, the NASDAQ. These types of funds, index funds, will generally try to make their portfolios mimic exactly what the composition of these indexes is. So as those indexes move, these index funds will mimic them almost exactly, if not to the dollar exactly. So they basically, what they're designed to do is if I want to just do what the market is doing, I can invest in an index fund and it should, in theory, do exactly what the market that is mimicking. The return should mimic that pretty much exactly. So that is going to do it for us here today. As always, if you are looking for personalized advice, please consult a financial professional. And if you like this type of content, please feel free to like the video, leave us a comment, subscribe to the channel. We are cruising along here with our Investing 101 series. We'd love to have you along the way with us. And until next time, you guys, that is Finance AF.